Okay, guys, great to be here with you, and thank you very much for being here. And today is Thursday, and that means this is our mentoring class. And today we have a great presentation for you. And Scott, I discussed with Scott to understand what you guys as traders, what you want to hear from us, what is the most hardest obstacle you need to get over. And it's coming back to us once and once again. This is the problem of how to handle trading losses. So today's presentation is going to deal exactly with this subject, how to handle a trading loss. And by the way, today I really got into a bad trade at the beginning of the day. It was Facebook, and I just put Facebook on the chart. Alright, so here's Facebook FB. It posted its earning earlier this morning, and actually it started with a gap up, and it seems at the first 5 minutes that this stock is going to go up. I took Facebook on the 1 minute chart. Right now we see it on the 5 minute chart. Anyway, it was in the first 5 minutes candle, and then it just went down. It was just a roller coaster, and I just lost, and my losses just piled in. Now, this is what I'm calling, and my traders in the Top Trader course know that this is what I'm calling disaster scenario. All right, and there is a very, very practical way how to get out of problems when you get into the wrong trade. And actually, I finished today with Facebook for $100 up, and maybe we will have time to discuss also the practical approach how to get out of problems. Just out of curiosity, that the IPO, and I'm a master of the IPOs. This is something that I really liked when I worked in Wall Street, and I'm doing it today. I never lose an IPO, and today we had a great IPO called ENTL. Let's put it on the chart, ENTL. And just out of curiosity, how many of you took ENTL? How many of you were involved today in this great trade of ENTL? By the way, ENTL right now is up more than 29%. What a nice chart. This is just what I call a VIP ride. After it went over the high of the first 5 minutes bar, it never looked behind, and what a nice trade. And actually, you see here my total P&L for today, $2,500. ENTL was accounted for about 1700 of that. So this is why I never lose an IPO. But the best thing from my point of view today in my trading wasn't ENTL, because this is a very, very easy trade. We just need to know it, and a lot of things regarding trading is about knowledge, and this is something that I'm trying to give in my Top Trader course, as well as in this presentation for you guys in our trading room, and as well in our Facebook community. So getting out of problems from my perspective was the best thing I was able to do today, because ENTL, it's not it's not a big wisdom to take money, or it's still a wisdom, because many traders don't let their profits run, but aside of that, getting out of problems, this is the most hardest obstacle, and this is what we are going to talk today. Okay, so just try the tip I've shared. Okay, so today's presentation is about I hate to lose, and we have a couple of very interesting information to show you. Also, but before that, I just want to take one one moment to show you our Facebook page. All right, and if you want to get to our Facebook page, just move your browser to facebook.com/shlomo.trading. You can also search for Shlomo Trading, and let's see what you are going to get there. So I'm going to put the browser on you, and you know we have already 320 likes, but we look for any additional like because we want to enlarge and we want this community to evolve, and we want it as larger as it can be. And this is really, you know, a community of traders that is just growing. So this Facebook page is concentrated in day trading and swing trading, and I'll be happy to see you there sharing your insights. And I'm posting every day my insights regarding the market as well as hot stocks for today. And just look what LVS, this was the first stock on the hot stock, what it did today, what TSCO did, and what Qualcomm did. Just, you know, trading these three symbols, and you can be up couple of grants today. And also you will get every day the IPO for this day, and tomorrow Friday we're going to have several of them. So here's ENTL, and according to my IPO system, only ENTL out of the three was valid entry, so we didn't enter FLKS and Lens. All right, if you want to read my latest post I posted this morning, what would you do with a $1,200 bonus? You are most welcome. And you know, most of all, you know, just ask questions, that just be involved. This community is for you and for me together. Okay, so my purpose in this community will be to show trades. I'm going to also, I recorded my day trading today. I'm going to post it next week, so you are going to have access for that, and you are going to see minute by minute, moment by moment, second by second how my trading platform was. You're going to hear my voice and to understand all my decisions, my real-time decisions, and I think this is a great way of learning, guys. So I'm showing here hot stocks every day, special videos, techniques, and everything. Okay, so here you can also see a slide regarding the Facebook and what you have there. And the first slide, not by mistake, is not by chance, is Steve Jobs from Apple. And you know, and Steve Jobs from Apple, he said that I'm the only person I know that's lost $250 million in 1 year. It's very character building, so we can actually understand. I'm not wishing anyone to lose such an amount. Probably most of us are not going to see this kind of amount, so we can't lose this huge amount. But you know, it's just telling us that we can learn a lot from losing, and this is part of the things we are going to talk about today. I have to say this up front: I hate to lose. I work very hard not to lose. I've never gotten used to or accepted my losses. The closest I've come is that I've learned to cope with my losses in a manner that results in the least amount of lingering collateral damage. And as I see it, guys, there are two types of losses. The first type of loss is simply a result of the laws of probability and is to be expected if you follow your methodology. I tell my classes that I lose about 4 out of every 10 trades. The novices in the class react by asking themselves why they are taking a trading class from such a loser. The experienced investors nod their heads in approval. The point is that when I lose, I cut my losses quickly to minimize the costs. When I have a winner, I let it run. It works out to be a net positive, as the winners more than compensate for the losers. For you sports fans, another way to look at it might be to ask how much would an NBA basketball team would pay me if I hit the basket only 6 out of 10 times. And I think this is not a bad statistics. Actually, I think my salary as a basketball player, should I come up with this result, could be very, very large. But I'm still staying a stock trader and not a basketball player. The second type of loss requires much more attention, and it also requires introspection and brutal self-honesty. Losses that result from ignoring your trading plan or other bad behavior is what we all need to minimize. There should be no such thing as learning to live with it. I don't like to hear a trader who tells me that he learned to live with losses. When it comes to the second type of loss, as it does with the first kind of loss, instead of that, the objective here is to appreciate and understand the difference between these two types of losses, a result of the law of probabilities and a result of ignoring your trading plan. Understand the difference of the losses, and to not let your confidence get eroded in those instances when you traded your plan, but still you came up. You finished the day with a small loss, resulted nevertheless. Now, imagine the following scenario. You work hard researching the markets and come up with a great trading idea, or that's what you think it's a great trading idea. The trade, although it seems like, at first look, it seems like a great idea, the trade loses money. You work hard a second time to find another trading idea. It also loses money. And this happens a few times until you end up with a string of trading losses. Ouch. This is obviously not a scenario you ever want to be in, of course. But if you trade regularly, I guarantee it will happen. It has happened to me many times in the past. It happens to me now, as today, and will continue to occur in the future. It happens to all traders, even the most profitable ones. The hardest thing, I think, the hardest part about trading losses is coming. The hardest thing about trading losses is coming to terms with the fact that you've worked so hard and actually lost money, and there aren't many other situations, there aren't many other cases outside the stock market where this occurs routinely, but it does occur regularly in trading, and no one can escape it. So let's try to understand firstly why most new traders lose money. Around 90% of traders lose money. This is the harsh figures of the statistics. And even though they do whatever they think they are supposed to do, they still lose out. When I first started trading, I was like that too. People are always handing out trading advice like, always keep your emotions in check, and don't let feelings affect your trading behavior, and so on. This advice is certainly important, but it is useless on its own. In spite of following all the standard advice, I lost my entire first trading account. And probably part of you were able to lose their first trading account. Have you ever lost money in a bad trade? And if yes, then you know how I felt. I was disappointed. I was ashamed. But instead of giving up, I told myself I was lucky. I was lucky it had only been a small amount of money. I gathered the courage to do it again, and this time I would do it right. I then set out to learn everything I could about how to trade. I read books on trading, subscribed to newsletters, talked to other traders, traded with top professional traders, and eventually began my second trading account. This time I was better prepared. I came up with better trading ideas, applied solid risk management techniques, and I saw my account beginning to grow. Throughout my trading career, I've constantly been studying different approaches to trading the markets. I've traded different assets over various time frames using all kinds of strategies and techniques. Over time, I've discovered what works for me and what doesn't. At the same time, I've made plenty of mistakes too. This includes trades gone wrong, strategies that stopped working, and sometimes poor discipline leading to poor results, and you all understand what I'm talking about. And here, Marty is brave enough to share with us that he has lost 3 accounts. Thank you for sharing, Marty. It's brave. At the same time, I've made plenty of mistakes too. This includes trades gone wrong, strategies that stopped working, and sometimes poor discipline, as I said, leading to poor results. The silver lining to making mistakes is that you can learn a lot from them. We tend to learn more from our failures than our successes. This is because we usually analyze the failures in greater detail in order to understand what went wrong, why the stock market pulled money out of my pocket instead of putting money into my pocket. And over the years, and after much trial and error, I have to tell you, I've learned a lot about how markets work. I learned that most of the advice I received when I started trading turned out to be useless. I learned that making money trading in the markets requires a deep understanding of market behavior. It also requires a strong level of commitment. With the Top Trader course, my aim, my mission, is to share my market and trading knowledge with you. And in this TradeNet community, my mission is to teach you all the secrets and all the techniques you need to be profitable in your trading efforts. So let's get started. After all, time is very important for anyone who wants to profit from trading strategies. The first and most important secret is that market movements are random. Yep. Most of your trading gains or losses are based on luck alone. Whenever markets move in a certain way, we try to find an explanation for why the movement occurred. It must be a result of something rational, we say, or the rising prices of some or other commodity, a rise in a stock price due to good earnings. If we can't find an explanation, we just go ahead and invent one. We then believe this explanation, even if it probably had nothing to do with why the market moved in the first place. And you know something? This is natural. We, human beings, are naturally curious creatures. We need answers. We don't live in the void. We like knowing things. We need to have a reason for everything. But do yourself a favor, a big favor, and switch off whatever business channel is feeding you and useless market explanations 24/7, because markets move in mysterious ways and we often can't explain the movement, and honestly it doesn't really matter in order to become a profitable trader. So forget about why the market moved, why a stock moved up or down. Just be aware that it did move and don't worry about why. The best way to interpret market movements is to think of them as random, because that's exactly what they are. The sooner you completely accept this fact, the sooner you can begin trading profitably. Your goal as a trader should be to find predictable movements between all these randomness. Although most market movements are random, there is usually an underlying trend. You need to find these trends and profit from them. Now, finding these trends is not easy. Even if you do find a way to predict the trends, you will be wrong a lot of the time due to the random movements of the markets. But that's okay, because your goal is not to be right all of the time. Okay, your true goal is to be correct more often than you are wrong. This is not easy. It is great challenge with even greater rewards, but I will help you every step of the way. As I said before, the reason most new traders lose money is that they follow the wrong advice. They focus too much on things like keeping emotions in check. Even though this is important, it doesn't help them find predictable movements in markets. Instead, new traders and also seasoned traders should focus on understanding the nature of market movements. And that's exactly what I'm showing you through the Top Trader course, which is an advanced course, and part of you have already taken it. As a market veteran, I'm still learning and studying the markets every day. My life's work is to identify underlying market trends and figure out where profits are made, and then bring these profit-making ideas to you. With my strategies and your commitment, great profits can be yours. You may be wondering how to find these underlying market trends. How do we know when a market movement is random versus when it can be predicted? And this brings me to the second secret that I'm going to reveal right now: how we can focus our efforts on the market movements that are predictable and use this to come up with profitable trading strategies. Okay. Step 1. Okay. Step 1 is handling trading losses. And step 1 in handling trading losses is to accept they are going to occur. You can't escape this. This is not as simple as it seems. Most people naturally assume that if they experience trading losses, they must have done something wrong. Absolutely not. This is the wrong idea. All right? This is the wrong idea. You may be a perfect trader and still losing. But that and this is why I'm saying losing is not necessarily a case that you've done something wrong. A good trading strategy is one that has a statistical edge. We are talking a lot about the edge in trading. This means it makes money on average, but it does not mean that it makes money all the time, because market movements are random, as I explained. It is impossible to predict the next move with 100% certainty, or even getting close to 100% certainty. As a result, good trading strategies experience losses, and often they experience a large string of trading losses. This is a risk that all traders must accept. What should we do if we encounter a string of trading losses? First, let's work on how we react to these losses. Chances are that if you have trading losses, you are going to be upset. I used to get upset when I encountered trading losses. It has taken me a few years to figure out how to deal with this. What you need to do is train your mind not to get upset when you have trading losses. Train your mind not to get upset. This is something that takes time. Whenever you have a trading loss, step back and take a few deep breaths. Calm yourself down. This is the next point. Tell yourself that trading losses are normal. Tell yourself that even top traders are experience losses on a regular basis, like I do. It is all part of the game, and it is a risk that I have accepted. Alright, this is, the cost of making business in Wall Street. Keep repeating this to yourself until you feel calm. Next time you encounter a trading loss, do the same thing. Over time, you will find that your emotional reaction to trading loss gets less dramatic. Eventually, you will reach the point where you have little or no emotional reaction to trading losses. And this is where you need to end up. Alright, this is your goal. You need to get to the point where trading losses don't affect your emotions or your behavior. Alright, this is your goal. Each and every one of you. You need to truly accept that trading losses are normal. You need to believe that just because you lost money, it doesn't necessarily mean that you have done something wrong. Once you are there, it is time to step 2. Alright. Step 2 is about what actions we can take once trading losses have occurred. Once we are calm and once we are ready to move on, what do we do next? Suppose you've made a string of trading losses. You are feeling calm and collected right now, and you are ready to do something about it. What you should do? There are 2 options here. Option number 1 is do nothing. You can do nothing and carry on with the same trading strategy you already use, you already come to know, to control, to understand. Option 2 is you can stop trading and come up with a new strategy before starting again, or maybe you need to examine your strategy and maybe you will need a little bit to change it. Depending on the situation, either of the options may be suitable. When deciding what you do, you need to first analyze your losses. The key question you need to answer is this: are my losses consistent with my trading strategy? And what do I mean by this? Are my losses consistent with the trading strategy I'm implementing? Suppose you have backtested your trading strategy and you are implementing it live in your account, in your trading account. If you analyze the backtest results, you should get a good idea of what the losses look like. For example, if you have a strategy that trades daily or less frequently, you should expect to have some months where you lose money. From your backtest results, you should also get an idea of the magnitude of potential losses. Alright, to know that you are within the rational and reasonable loss. The next step is to compare your actual losses with your backtest results. Then you can ask whether your losses are consistent with your trading strategy. If your losses are consistent with your strategy, the best thing to do is carry on executing your trading strategy. That means probably your trading strategy, and every strategy does that, is suffering right now from a drawdown. That means a sequence of losses, but usually a good trading strategy knows how to get out of this hole and to compensate you later. Assuming your trading strategy is a good one, you should return to profitability soon. This is the meaning of a good trading strategy. What happens if the losses are not consistent with the strategy? What happens if you are losing a lot more money than you expect to? Now, things are changing. This is a game changer. At this point, you should consider going back to the drawing board. It is likely that the trading strategy is no longer works as well as it should. At this point, it is time to come up with a new trading strategy. And here is a little secrets about all trading strategies. At some point, every strategy stops working. And why is that? Why is this? Market conditions change over time, and market patterns do as well. So at some point, the strategy that you are using will become out of date. All right, will become expired. When you encounter trading losses, you need to evaluate whether your strategy has become expired one, and if so, you need a new strategy. And this is why I'm teaching in my Top Trader class, in my Top Trader course, 12 different strategies. Alright, so so like a fisherman, we just need to sit on the edge of the lake to throw out maybe trying to dig out from couple of points and wait till we see a fish at one of our stations. When we see a fish, then we know how to take advantage of, and the station is our strategy. We need a couple of strategies together in our trading, and 12 strategies is more than enough. What many traders, myself included, do is have a pipeline of different strategies. Even while I'm trading a strategy now, I'm simultaneously working on developing new strategies. And sometimes it's not that the whole strategy has expired and you need to throw it out. A lot of time it's just you need to tweak it a little bit, to change a couple of very minor things in order to bring it back into profitability. That way, if my current strategy stops working, I can replace it with an upgraded strategy, or I can replace it with another one. To be a successful trader, you need to be always researching new strategies. You can't have too much of them. Alright? And there are many strategies, but there are not a lot of good strategies. There are not a lot of proved strategies. Alright? And this is maybe the keyword here in trading, to know what is working and to implement what is working. Most of the retail traders don't know that. Okay? To be successful, then you need to be always researching new strategies. You never know when market conditions change, and you need to be ready for when they do. So if we sum it up, handling trading losses consists of the following steps. First step is keep your emotions in check and ensure, I will add to that you are making rational decisions. Second step is evaluate whether your losses are consistent with your trading strategy. Third one, if they are consistent, then carry on implementing your strategy as normal. And if your strategy is not consistent, then what you need to do is to change your strategy, maybe to tweak it a little bit, maybe to replace it with a new one, maybe to upgrade it before come back to trading. If you follow these 4 steps, you will learn to handle trading losses correctly, and this will ensure that you are profitable over the long term. Thank you very much all for being here with me for the last 40 minutes, and as always, if there are any questions regarding this material, if you have any question whatsoever, or if you want to ask me anything, alright, I'll give a couple of minutes for that before we end this mentoring class today. Alright, so I can see a couple of traders are typing. We'll give them the time. Ty, I only now can see your posts. Get married will help kill your emotions. Alright, don't tell that to those who are not married yet. Alright? You can take the air out of them. Okay, so Lyson is taking us back to the IPO, and alright, as I said, all questions are welcome right now, and they don't have to concentrate on a certain or specific subject. And I'll get back to the IPO. If your computer is freezing, first of all, it's the language, it's the interaction between the software and your computer. You have to understand that the pipe that absorb and getting all the information for an IPO, when we are talking about our IPO, the flow is on extreme. All right, the flow of data is on extreme. It's not the usual data stream. So a lot of time when the software tries to interact with your computer and deliver this wide information and vast information, your computer is just not able to handling that. Usually it occurs with hot IPOs that have a lot of hype circling them, like Facebook, like Twitter, like Alibaba. But with my computer, I never saw, even in Alibaba case, PABA, which today is plunging, even with Alibaba, I've never seen an IPO that is stacking my computer. All right, and today Alibaba is plunging more than 8.5% after, by the way, good earnings. But as I said, a lot of time the reaction of a stock is randomly based on the trader's emotion. Anyway, I think that the most important thing to do is to buy a very good computer, because I don't think you need to stop trading IPOs if it freezes your computer. Hey, you can't allow yourself to ignore such great profits. So what is a good computer? A good computer, and I'll just give it to you in couple of words. First of all, you need at least a CPU of i5. I have an i7 Intel CPU in my machine, but it's just because I'm having all sort of YouTubes, so I need to take care and I need to compile all sort of videos, all sort of graphics, and then the i7 is actually is actually making the job much better. i5 is fine enough. i7 is a little bit, of course, better. Also RAM, all right, RAM, this is the memory in our computer. You need to set it at least 8 gigabyte, and today it's not a thing to get 8 gigabyte RAM. It's almost a common thing. Next to RAM is the storage in your computer, not the RAM, but the storage. We all know that computers store our data on hard disks, but in the last 2 years, a new device has developed which called SSD. All right, SSD. SSD it's like a flash memory. It's pretty expensive. I don't think it costs more than $100, and you need to get only 128 gigabyte of the SSD, and to install there only your operating system. All right, your operating system and the programs and the software. On the hard disk, on the other way, you want to store all your movies, all the data you create with your computer, all your music, all your beloved family's photos. This is what you store on the hard disk. All right, because the SSD is going to make your computer much quicker. And the last one is the operating system. Don't take my advice, don't take Windows 8. Windows 8 is just going to suck all the system, all the great system you put in your computer, all right, and then you've done nothing, because Windows 8 needs a lot of capabilities in order to run on the computer. So try to go with Windows 7 if it's suitable, because Windows 8 won't do a good job. We are all waiting this year to hear the debut of Windows 10. Actually, Microsoft is going to skip version 9, from a marketing perspective, and they are just going to announce this year Windows 10, and then we will see how that works. But basically, this is the devices. This is how you want to assemble your computer, your trading machine. All right, that answers your question. All right, I'll just scroll up to see if there are more questions. Okay, there are more questions. Yeah, so Lysin, what I showed, removing the market makers and leaving in the level 2 only the ECNs, you don't need to do it regularly, only for IPOs, okay? Only for IPOs. Nelson is asking, what generally is your maximum drawdown in a trade? It may get to $2,500. It may get to, but it's very not common. All right, very rarely. And this is what happened to me with Facebook today, and you'll see it on a video I'm going to post. Alright, so Ramin is asking, how long did it take you to become consistently profitable? For me, it took 3 years. I know that there are traders who managed to do that in only 1 year. Usually, it's about 2 to 3 years. So yes, I know even one trader that after 6 months, he became a profitable trader, but that's that's not common. Usually it's 2 to 3 years, and the profitable trader is the one that shows a high degree of consistency, of determination, someone who really want to succeed in this business, and also he invests in the knowledge. Absolutely, because it's knowledge all the way. Yeah, I believe so, Ty. I can trace most of my problems back to emotions. When that is done, I'm sure I can profitably consistently. Absolutely, because we are the best. We are the first problem of ourselves. We are the biggest enemy of ourselves. All right, and the emotion is actually, our enemy, and we need to fight it. Okay. All right. Watent is asking what the lockup, what the lock account refers to. So actually, your account can be actually the system, the platform can be connected to more than one account, and then you have here a drop-down menu, and if you have more than one account attached to this platform, you are going to switch between them. So log account means that I don't need to choose the account, it's just logged on the current account. All right. All right. Okay, guys, thank you very much for being here with me. Okay, thank you very much for being here with me, and it was a pleasure. Hopefully it was useful information, and I'll see you all, guys, in the trading room, in Facebook, in any platform or media that we can interact. Thank you very much for being here with me. Many thanks, many thanks.